Hey, I can see it now. Perfect. Perfect. All right, so, oh man, you got like a minute. So let me, you want to pull up, do you have a slideshow? That sounds good, man. I'm gonna be removing myself, and then you just take it over. All right. After that, you can just, say bye to everybody, and then I'll just shut everybody and broadcast. You have a blessing. So that channel on the right side, I'm like, hey, I want to know.
All right, so you have people coming in now.
Okay.
Yep. I think if you look at the live button on top, it tells you how many people are coming in. Should be on the upper left hand.
Yes, you direct them to right on the right.
Let me see that. Oh, live. Okay, yeah. Okay.
Right next to it shows you the number. If it's 4.
It says the time. It says the time. It's just counting down the time.
Yep.
Yeah.
And it tells you, and right next to that time, it shows you like 4. Right now it's at 5. So 5 people it's in right now.
Okay.
Yeah,
Yeah,
so
it's not showing me that.
okay. Yeah, you have people coming in already.
Okay.
Yep.
That's good.
Yeah. We don't. These are new things we're learning, right? So the new thing we're learning is they can end the sessions themselves by just exit.
Elijah.
So we don't have to monitor it.
So where's your headquarters? At Nick's?
No.
Yeah,
What's up, John?
How you making out?
How are you, brother? It's good to see you. Are you guys live? You guys rolling?
He's live.
Yo, you spitting fire, John? You ready to drop some knowledge for my people?
Of course.
Yo, real quick, for anyone who's tuning in, let us know where you're tuning in from. You guys watching from Brooklyn? You guys watching from Middlesex? You guys watching from Jersey City? We're in Jersey City right now. Shout out, John. Where are you watching from?
I'm in Totowa, in North Jersey. In Totowa.
Shout out Toto.
Right in my office.
I'm grateful to have you on here, man. I'm excited for your knowledge.
Thank you. Excellent.
That's what's going on right now, right?
All right, so people are commenting right now.
Matt.
We have people from Bayonne, Motown.
Nice.
You're not live yet.
We love you,
I'm
man.
not able to see it. Let me see.
By the way,
Yep.
once we let you go, you have the whole screen run as long as you want.
Are you seeing the comments? Because I'm not seeing the comments on my side.
Hey, Elijah, he's not seeing comments on his side.
Just run as long as you want. It's your
Oh, let me. Oh, okay, okay.
Yeah, you see him now?
I see it now. Yeah, there's a private chat in comments. Okay, I see.
Correct. Motown. We got Bayonne in the house. What's up, guys? Good to see you.
Okay. You gotta get used to these.
All right, is John good? He can go by himself.
Yeah, I think he's good.
All right, John, you ready? Are you gonna be doing a presentation?
Yeah.
Once you want to end,
I
just
have a PowerPoint.
exit the screen.
All right, John, you're good. Go kill it, buddy.
Wait. Also, John, if you want to end, just exit the screen because we're not gonna come back tell you you're gonna end and all that stuff.
Okay, just do. Okay, no problem. All right, guys. Hopefully everyone can hear me all right. So new way of doing business here. So guys, thanks for tuning in. I'm seeing some of the comments come up. Let us know where you're coming in from. My name is John Palumbo. Pleasure to be here with you guys. I'm with Freedom Mortgage. And just a little background on myself. Okay, so I'm a mortgage banker, first and foremost, but I'm also an investor. I've been doing a lot of these events for many years. I'm almost 18 years in this business. So I've probably seen every kind of scenario you can possibly imagine. And, being an investor as well, I started investing in property as a kid. I mostly buy and hold. I'm flipping a property right now. I'm very in tune with the investor world, the language of investors, what you look for, because I look for the same thing. So I am excited to be here to introduce this particular topic, which I feel is an underutilized, thing that's out there in terms of financing. Okay, so with the financing that's out there, you have your, hard money lenders are great. Okay, I think Dave is actually presenting as well today from Alpha. They're excellent. A lot of good hard money lender guys today that you can hear from as well. You have your private money, okay, which is another great source of money. But you also have your traditional lending, which is what we do. And, again, a lot of people who are investors may tend to shy away from the traditional lending world because they're afraid they're not going to qualify or it's going to take too long. And, there's obviously more paperwork involved with this process, but nonetheless, we try to really simplify and make it easy for you guys and know that it's an option that's out there. It may not always be the best option, but it certainly is definitely a good option when it's, when it works out for you and your timing. With the pandemic, just to kind of give you a little background on what's going on in the mortgage world. So banks have become, very strict. They've tightened a lot of guidelines. A lot of hard money lenders even stopped lending for a while. Things are more expensive. Requirements are harder. You're looking at higher credit scores, more reserves. Rates have come up, on riskier products. Banks literally pulled a lot of the those non-QM products that are out there. Again, those riskier type products have just been pulled. Now I'm starting to see them come back, and you're gonna continue to see them come back, and things hopefully will calm down for a while. But for now, it's good to know what options are still available in the market. Renovation lending is one thing that Freedom does best, and we have never stopped the lending with the renovations is going on the same as always. Okay, there are no restrictions on it. There are no additional overlays on it. So really a great product to understand and learn about, because again, a lot of people don't even know it's available. If you guys can, you have questions as I go, I'm going to go through a presentation, okay? And then just type in your questions in the chat, and then I'll be happy to answer those questions for you. Depending on my time, I'll go through and I'll answer whatever I can. All right, so I'm going to get right to it. Okay, so we just set up here. Okay, all right, so just a little information on myself. And again, I work out of the Toto in New Jersey branch. I run a very successful team of loan officers, and we're here to always help you guys and answer any questions you may have. So let's talk about renovation lending. What exactly is renovation lending? So renovation lending is basically where we give you money to either purchase or refinance a property. We include the money into the loan, okay, for the renovation piece, which includes your labor and your material. Okay, now, again, a lot of times you're going directly to a hard money lender to get a quick loan. They can be very expensive, although they're easier to get maybe in terms of timing. Okay, but I want you guys to know what is out there so that you can make that decision on what's best for you. It's a first lien mortgage, and again, it's for a purchase or a refi transaction. It's one loan, okay? And there's two main ones that are out there. You have a home style loan, which is what I'll mostly touch on today, okay, which is also geared for investors. Then you have your FHA 203K, okay, which is probably the more common one that you may hear out there in the marketplace. 203Ks are only for primary home buyers. It's a great loan for your first time buyer looking to buy a property, maybe a 1 to 4 family that needs renovation. We do a ton of them. Not an investor product, so I'm not going to touch too much on it today. But definitely, you can always call me. If you want to discuss about 203Ks, I do a ton of those as well. Okay, we follow straight guidelines for conventional and FHA guides. We don't set extra overlays on this, as I mentioned. The minimum credit score on this is a 620. Okay, that's across the board, industry-wide. Usually, that's what you're going to see on these types of loans. The renovation part begins immediately. Okay, right after you close. The nice thing about us is that we do all this in-house. Okay, so you're not working with a broker that is going to sell this loan off to like a Freedom, where sometimes you have to wait 30 days just to begin the process because they're not going to disperse any money. Once we close, we're already going into the post-closing phase, and then our department that handles it right in-house starts the process within a couple of days. They're already in communication with your contractor, with you as the homeowner, and getting everything moving. Timing is very important. Time is money in what we do, and it's very important. And that's why we have that, the ability to move this a lot quicker than other lenders, because we're an in-house lender on it. Okay, so again, it's one loan. So the little confusion sometimes that it's a like a temporary loan, then you have to refi to a permanent. It's one straight loan, one closing, you're done. Okay, that's the beauty of it. And it's so affordable. I will say that Freedom has probably some of the best rates in the market for this product. We don't upsell, we don't increase rates on this product. If the conventional rates are 3.5% or 3%, that's what we sell our renovation loans at. We don't upsell them. We don't increase rates. And any other one you speak to, they'll always tell you, yeah, we offer them, but the rates are a lot higher. Not the case for us. Same thing with the fees. The fees are the same. Depending on the state, we charge generally under $1,000, maybe $695, $795 in fees. That's it. for these types of loans. So it really saves you a ton of money. No seasoning requirements. You can literally buy a house today and then refinance it tomorrow. Okay, if you could buy a house today, fix it, and sell it in 2 months, there is no seasoning on this product at all. 15% down is the minimum. That's for investments. I'll touch on for primary residences as well, but 15% for the investors that are out there. And it's only for single family though. When you run across a property that may need renovation as a multi-unit, you will have to go most likely to a hard money lender. There's nothing in the market in the traditional lending world right now that allows this type of product for multi-units. Okay, so hopefully that will eventually come out, not as of yet. Choose your own contractor. The contractor is a very important and critical part of this, of the renovation. We always recommend that you do your due diligence on a contractor. We don't like to recommend contractors for the obvious reasons. I always get the question, can you recommend somebody? I would love to, but the problem is if something goes wrong, you're going to say, I recommended that person. So as a company, we really want you to do your own homework on contractors. Find someone that you're comfortable with. There are great websites out there like house.com, 203kcontractors.com. I personally love to use Home Advisor. I get all my guys off Home Advisor. It has all their reviews. It's a free site. So the contractor has to obviously be licensed and insured properly. And you really want to work with somebody that has experience dealing with, renovation loans, because there's a process. Their money is in an account that gets dispersed out post-closing to these contractors. They're going to have to front money, buy material and things of that nature. But they also have to complete paperwork. There's documents that have to be completed. A lot of contractors are great at fixing things or building homes, but they're not very good with paperwork. So it's important that they can complete some paperwork. And we have a department that will walk them through it. If we have to talk to them on a daily basis and walk them through, we have departments that designated just for that part. Okay, so we really move this thing forward. How we have it set up. 6 to 9 months from start to finish on a project. That's generally the timeline that we allow. We will allow up to a year or longer because sometimes permits get delayed and things of that nature. So we will, on a case-by-case, extend as well. Now, material drawers are now allowed. So basically, in the beginning with this loan, we were not able to disperse any money to the contractor upon closing. Now, the nice thing is that we are able to give usually up to 50% of the material cost right at the closing to the contractor. So it allows them to, they don't have to put all the money up front, which is nice for the contractor, okay? You can also use this loan to refi out of hard money loans, okay? If you pick up a property under hard money, you decide you want to renovate it, I could jump right in, refi you the next day, give you a renovation loan, and take you out of the hard money. Hard money is great, but it's temporary, right? You have to have an exit strategy. You either have to sell the house or you have to refi out of the hard money within 6 months to a year, whatever it be. Okay, so you have to have an exit strategy, and that's where I can come in and help. Okay, so a lot of good points there. So what are some of the eligible properties? Okay, you have your 1 to 4 family primary residences. So the 203Ks, as I mentioned, you can go up to a 4 family and still do a 203K, putting 3.5% down payment. Okay, it's a great product for your primary buyers, generally your first-time buyers. For the investors out there, single family only, as I mentioned before, that's very important to understand. Single family could be an investment. It could be a secondary home, okay, for the home style product. Modular homes, condos, PUDs. A PUD is a planned unit development, okay? Townhomes, unfinished new construction, which is mostly finished. I'll touch on that in a sec as well. Okay, some of your ineligible properties here on this list: manufactured homes, timeshares. We don't do commercial. We're not a commercial lender. We can always refer you to good commercial people if you run across those. Farms, historical properties, deed restrictions can be an issue. Properties located in lava zones 1 and 2. If you live near a volcano, I'm sorry, I can't really help you. We don't do them. I haven't ran across one yet. Properties that have been assumed in life estates. So these are some of the properties that would be ineligible for this product. Okay. Okay. So some of the eligible repairs. The beauty of this product is that there's really no restrictions. The 203K does carry some restrictions, but the home style loan particularly is very flexible with any kind of repair you want to do. Okay, as long as it's something that permanently fixes to the property, gives it value. Okay, that's something that we'll do. For example, you can't furnish your home with a renovation loan. You can't buy furniture, things of that nature, but you can do any type of repair. There are no in terms of the required improvements, the bank will require certain things that must be done that are like a hazard, for example. If you have broken steps or broken windows, your roof is leaking, there's mold, asbestos, these are mandatory items that must be done under a renovation loan. However, you can add in any other type of work that you'd want to add in to your liking, whether it's cosmetic, structural, whatever it be. Okay, you could do full renovations of kitchens, bathrooms, cabinets, appliances, fixtures, trim, paint. I mean, the list is endless. You can do anything you'd like. Full gut jobs, attic levels, and we've done all of this. You know, plumbing, electrical, AC. It could be a small project. You know, it could be a few $1,000s of a project. You know, that maybe you want to just redo your AC, or maybe you just want to paint the home. You could do as little as a few $1,000s of work, and there's all the way to a maximum of a few $100,000 of work. Okay, so it's very, very flexible in that aspect. Septics we've replaced, oil tank removal. So this is important for you investors, right? If there's an oil tank, you can use this product to take out an oil tank. Now, like anything else, you have to do your due diligence, because there's going to be a set amount of money in the budget to remove the oil tank and do remediation. You obviously don't want to run out of money if we're not doing the research correctly on this to see what the extent of the damage is. So that could be kind of a gray area sometimes, depending on the type of oil tank and how it's situated. But we definitely remove oil tanks. We've lifted homes, properties in flood zones. We've lifted homes with this product as well. Okay, so the list goes on and on. Okay, we talked about the properties that are almost fully completed. If you have a property that the contractor started to work on but did not finish, that's fine. We'll jump in and finish it for you. What we're not going to get involved in is a property that's been exposed to the elements. Contractor jumped in, started the project, ran out of money. The property has been sitting for 6 months, snow, ice, rain. It's exposed to the elements. You probably have to tear the house down and redo it at some point. So the house has to be weather tight, walls up, framed, okay, and not exposed to the elements. So we'll definitely jump in and finish it off, whatever it needs to be done. Luxury items, pools, rec rooms, patios, basements. All of that is allowed under this product. Okay. So there's a question in the chat about what if there's no equity in the home? Can you do a renovation? Absolutely. And that's the beauty of this product, is that we look at the after improved value of this product, okay, of the property. So for example, you have people that may be living in a home that like where they live, but they don't, and maybe they outgrew the property, but they don't have the money to really move to another house, or maybe something is, maybe the job is giving them an issue, they won't qualify. They can potentially refinance that property, maybe do an extension, and then we look at the after improved value. So we lend based on that scope of work, and we look at the after improved value. So yes, there could be a house with no equity, and we would still be able to lend on it based on that. Okay. Identity of interest is allowed. If you want to hire your relative to do the work, great, it is allowed. Okay. So that's another benefit of the program as well. Ineligible repairs, do it yourself. Okay, you're not allowed to do your own work. You do have to hire a GC. Okay. However, the exception to that is that, for example, if you're a licensed electrician, let's say, you just want to do the electrical portion of it, or you're a framer, you want to help with the framing, we will allow that on a case-by-case basis as a sub. Okay, but you have to definitely hire a GC though to do the job. Okay, complete teardowns and reconstructions are not allowed. That's more of it's just straight construction loan. Okay, also building from the ground up. If you buy a piece of land, okay, we can't use this product to build a brand new home. Has to be usually a foundation with framing, and we can take it from there. Okay, any renovation that takes longer than 9 months, again on a case by case, will allow you to go up to a year, if not longer. If there are exceptions for legitimate reasons. Conversions, generally downward, we would allow. Upward can be a problem. Like if you want to convert a 1 to a 2, that can be a problem because you have to go for variances and stand in front of the board, get approvals. We don't know that it's going to be approved, so we really don't get involved with conversions. If it's downward, if you have like a 2-family wanted to convert to a 1, generally these are properties that have at one point already been converted, and it's an easy conversion back. All right, so we'll look at these on a case-by-case basis. Okay, let's talk about the loan to value. So this product allows you to buy a house with as little as even 3% down. If you're a first-time buyer, primary residence, single family, 3% down. It's fantastic. The for investors, if you go look to the bottom here, you're looking at 15% down, as I mentioned before, 85% loan to value. We also do secondary homes, as well as investments in primary residences, purchase or refis. All right, so this is a handy chart just to kind of understand the the requirements for down payment. Okay, the question come in on the credit. Okay, credit minimum, okay, is a 620 across the board for both of these products, and income requirements in terms of that. When we calculate a borrower, when we qualify someone, we look at what's called a debt to income ratio. We weigh your debt versus your income, and that's the formula that we use. And minimum, you can't exceed usually 50% debt to income, but 45 to 50, usually that's the range that these loans will get approved under. Okay, FHA on the other hand goes up to 57. You can go up to about 55 to 57% debt to income ratio depending on the property. Okay, so let me run through the steps of how this works. The first step is to get pre-approved. Okay, what is that process? The process of getting pre-approved involves three main things. Okay, and we're going to be different from maybe a hard money lender, how they're going to approve a deal. They're going to look at more of the property itself to see if they like the deal, and also want to know what the exit strategy is, what's the income, what's the expenses. We're going to look more at your personal financials. We're going to ask you to, we're going to run the credit, get permission to run the credit. We'll look at your debt, your credit scores, your overall credit history. We're going to look at your income. Okay, so we're going to weigh your income. We're also going to use rental income on the property. Even if the property is completely vacant, we will still use market rent off the appraisal report, okay, because we're going to assume that you're going to rent it. So we will use market rent. There's no restrictions on that. Lastly, your assets. How much money do you have available to put down on the property? Okay, do you have some reserves? Is it your own money? Are you getting a gift? So we will analyze where the assets are coming from. Investments don't allow gifts, by the way. It has to be all your own funds, and the minimum is 15% down. And you also have to have a minimum of 6 months in reserve in the bank to show as extra funds as well. Okay, so that's really the first step. Get yourself pre-approved, and we can then jump to the next step of finding a property. Once you get yourself into contract, okay, that's when you start to obtain your contractor bids. Always a good idea to get a couple bids, maybe 2 or 3 bids you can compare. Okay, definitely, again, utilize those websites I mentioned. Home Advisors are a really good one. Define and detail scope of work. So this is important to understand how this part works. So consultant is someone that we require when the repairs are either structural in nature or they're over $50,000 in total renovation cost. A consultant will go to the property with you and basically put together the scope of work. He'll put together a budget. He will tell you what are the mandatory things that have to be done at this property. And he will also tell you, then ask you what your wish list is. And he'll include all of that in a work write-up. The contractor that you select has to stay within the budget of the consultant. So this is good because it kind of protects you as the homeowner. If you have for example, a contractor that comes in and throws out a crazy number in terms of repairs, you may not know because it's your first time and you're not maybe familiar with what renovation costs should be, what labor and material costs are in your area. The consultant will be familiar with it, and he'll say, wait a minute, this doesn't make sense. You have to stay within this budget. Repairing a roof costs, $10,000, let's say. Why is your estimate 25? So they have to work hand in hand in order to meet the numbers and also make sure that all the mandatory things are done and really make sure that there's enough money in this budget to get this project done the right way. Also built within the estimates are other things such as permit fees, if there's an architect or an engineer, draw disbursements, title updates, final inspections. There's also a contingency reserve built in there. That's an extra 10 to 15% of the bid added into the numbers as like an emergency fund. Like you tear down a wall and realize there's broken pipes that have to be fixed or something that was not accounted for. You have that extra money built in to cover those unexpected costs, okay? At the end, whatever money's not used or left over gets applied back to your mortgage, okay? So it's your money. It will get applied back to the mortgage. You also have the ability to finance mortgage payments. Your mortgage payment always begins 1 month after you close. So for example, if you close on a house in August, you don't make a payment in August, you skip September. First payment's due by October. Now, if the house is under renovation, okay, you may be paying rent somewhere, not able to move in. We will allow you to build the cost of the mortgage payments into the loan itself and cover your mortgage for X amount of months, up to 6 months generally, if your house takes that long to construct, okay? This is not allowed, though, for investors. It's only allowed for primary home buyers, okay? Not for investors. Just keep that in mind. All right, so that's how the consultant part works. And we will recommend the consultant, but you can also select your consultant off of HUD's approved list. And generally, the cost of a consultant is anywhere from $500 to $1,000 for the consultant fees, okay? Which also can be financed into the loan as well, okay? Once you have your scope of work, your consultant report, your contractor's estimate, then we submit all those in for review, and we can order the appraisal. The appraisal will look at the scope of work and give the property, what is the after improved value of this property. We lend based on that value. We want to make sure that this project will substantiate the value. For example, if you're buying a property that's for $300,000, you're putting $100,000 of work into it, but the after improved value is $350,000, really not a good deal, correct? It's really not going to be a good deal, and the bank's not going to lend on that. We want to see that the value at least should be over $400,000, since you're putting $100,000 of work into it. So that's very important. That's where the after improved value will come in. Okay. Let me know if you guys have any questions on that part of it, the pre-approval process stage, and how the steps have worked so far. Just throw your questions into the chat, and I'll be happy to answer them for you. Once that comes in, okay, we have the loan get submitted into underwriting. We get the mortgage commitment, just like any other transaction. At the same time, we're working on approving the borrower. My renovation department is working on all the documents from the contractor and clearing the stipulations on the contractor side with the scope of work and making sure that we're clearing everything there. And this includes things like making sure that the borrower is licensed, insured properly. We vet them from the very beginning, making sure that all the details of the reports are matching. The appraisal, adjusts his report accordingly. It's a process with this. And generally these loans will take you probably about 45 to 60 days. That's the normal turn time for these loans from beginning to end. Once everything is cleared, we clear conditions, we sign off on the renovation, okay? We will then move to a clear to close, and the construction phase begins post-closing. Question came in, do we have a Spanish-speaking representative? Absolutely. We have almost every language representative. Absolutely can help you with that. No problem. Another question came in, is the loan to value based on the property you're purchasing or the purchaser's finances? The loan to value is based on actually the after improved value, okay, of the property. So if you're buying the house for $300,000, but it's worth $450,000 after improved value, we will base the loan to value on that after improved value, okay? So that's, again, the benefit of this program. If you own a property and there's no equity, you could still get the loan financed with a renovation loan. Sometimes clients will try to, for example, pull a home equity line from their house. There's no equity. They can't do anything. They try to refinance, cash out. They can't pull money out. There's no equity. Go in with a renovation loan, you get the house done, okay? So once the construction phase begins, the permits go in place, okay? And that's when you complete all the renovations part of it. And the renovation could take, 1 month. It could take 9 months. It depends on the scope of the job. But through every step of the way, the consultant will be there to inspect, make sure the work is done properly, and then request for the draws to be given to the contractor. The money is the checks are sent to the contractor, but they're payable to both the homeowner and the contractor. So you as the homeowner have to also sign off on these checks so that the contractor can cash the check. Point is, we want to make sure the work is done. We're not going to release money to the contractor without making sure the project is completed properly. With that said, you should not be putting any money out of your pocket whatsoever. From the very beginning, we make sure to include all the costs for the labor, the material, all from the very beginning into the loan. So if the contractor is asking you for money, he shouldn't be asking you for money, because the money's built in already into the loan, and you should not be putting money out of your pocket. We're there because we're going to be required to pay this contractor, and if he doesn't pay you back, that money can be lost. We've seen that happen many times. Okay, so just keep that in mind. Okay, so let's just compare briefly on the benefits of the home style rental loan versus hard money. And I'm a big fan of hard money. Hard money is easy to get, can be quick, but there's disadvantages of it. It's very expensive. You have timeframes that have to be met. You have to have an exit strategy. Okay, so the home style money, it's by far the cheapest money in the market. We're giving out rates right now in the twos. I mean, in the upper twos, low threes on 30-year fixed mortgages, which is insane. I'm doing this a long time, almost 18 years. I've never seen rates hit this low. So if you can get construction money even in the low threes, mid threes, that's fantastic. There's nothing better in the marketplace than this. So that's why it's always important to compare your options, because if you buy a house and you can purchase it and you have 30, 45 days or 60 days to close on it and do it this way, then this is the way to go. Okay. 30-year fixed rates. These are fixed interest rates. It's not a loan that's going to balloon. Okay. You can hold the property, you can flip the property, whatever you'd like to do with it. We have options with no points, generally on primary buyers. More so now, investment properties are a little bit more costly than they were, 3-4 months ago before the pandemic. But we're still the cheapest money in the marketplace by far. So this is a great option. Increase your cash flow, no money out of pocket. We talked about that. When you take a hard money loan, a lot of times you have to pay the contractor, to start work and put money out of pocket. You're not paying anything to the contractor with these loans. It's all included in the loan itself. Okay. The only cost out of your pocket, for example, if you're doing a refi, for example, is the consultant fee and the appraisal report. That's it. If you're purchasing a home, once you close, you pay your normal down payment and closing costs. That's it. There's nothing else out of your pocket. Material draws are allowed. We now, as I mentioned, we give money up front to the contractors to buy material, which helps them out. Okay. And that's not on every product. That is allowed for this particular product. Okay. It's not allowed for, like, for example, a full 203K. They're not going to give money up front. Okay. 6 to 9 months completion. We talked about that already. This doesn't balloon. Okay. This is really probably the most important point here is that this is a one loan. You're done. You're in. You got a low rate fixed. You don't have to sell the property. I'm big on buy and holds. So I've used this product myself to buy property, renovate, and hold these properties. And I have never had to refinance out of it because it's already done. I'm in a low rate and it's, you don't have to worry about finding new financing on it. Okay. So just some good and bad on the differences with the hard money and private money. I'm sorry, the home style renovation. So if you're an investor now looking to sell a property, let's say you picked up a property and you're looking to sell it as is, you don't want to do the renovation. Why not market it as to your new buyer under one of these products? Okay. And the benefits to the borrower there are many benefits to the borrower, right? So they can pick up a property and utilize a renovation loan, get low interest rates versus alternative methods of financing, such as borrowing against their credit cards or liquidating their assets, or there could be tax implications. Personal loans, 16% rate, if you take a personal loan, they're very expensive. So you're telling them on, hey, here's a property, needs to be finished. Okay. There's this type of financing that's out there. Go get a pre-approval, get pre-approved by Freedom, and then see if you can qualify for my house, okay, as is. And paid more, mortgage interest is tax deductible. A lot of these other things, types of money you borrow is not tax deductible. Okay, repairs are made immediately. So you get someone that goes into a house that they say, yeah, we'll fix it, and it takes them 10 years to fix the property because they have to come up with all the money. It's a never-ending project. Here, you pick up a house, you take the rental loan, you do it all in one shot, you're done in 2-3 months, and you make the house your own. Of course, renovations will automatically increase the value of your property if you want to resell. Okay, that's always a benefit of doing a renovation to your home. And buyers can just finish the house how they like. Some people will sell a house and do the bare minimums on it and allow a buyer to come in and choose their finishes. That may make a property more attractive to a buyer who can choose their own granite or their own, paint or flooring, windows, things of that nature. So this is a great loan if you just want to also sell your house, okay, as is, and not actually do the renovation yourself. Okay. So some of the myths, okay, you're probably going to always think that they're not available to investors. You now know that they are available to investors. This is people automatically think that 2 or 3Ks, and the truth of the matter is a lot of lenders don't sell this product. They don't do them. They don't understand how they work. They don't offer them. This is a Fannie Mae product. It's been around forever. And we've been doing them forever. But unfortunately, a lot of lenders just don't offer it. So these loans are absolutely available to investors, but only for single family. So just keep that in mind. Okay. Renovation loans take too long to close. Absolutely can take too long to close and be a nightmare if you're working with the wrong people. And again, I see this every day where I have to jump in the middle of it, take over the loan, because unfortunately there's just a lot of lenders that say that they do them, and they do them, but they don't do many. They don't have departments set up just for renovation loans. They don't have underwriters that only know how to underwrite renovation loans. So we do it completely different. We dedicate departments just to this product because we understand the complexity and all the moving parts with these types of loans. And that's why we have it set up this way so that we can move the process along. And we generally would close these loans. I mean, I've closed these loans in under 30 days. If I have a good contractor, my borrower's getting documents, I have a good attorney on hand who's doing things on his side, I can close these easy within 30, 45 days. Okay, so definitely we can get that done. Renovation loans are too hard and restrictive. Truth of the matter is there are more moving parts, as I mentioned, to a renovation loan. You have a contractor involved, you have a consultant that's involved. One of the things that delays these products is if you're making changes. For example, you have a budget of a renovation put together, and now you want to change your scope of work. When you change the scope of work, now we have to change the consultant's report. We have to now go back to the appraiser and change the appraisal again, make sure it doesn't affect value. We have to go back to underwriting and redo our numbers because now the numbers changed. So it's like a domino effect. So yes, of course, you can change scope of work, but try and have a plan set from the very beginning and not make too many changes, because that's what's going to really, push off the closing on this and delay it. Okay, so definitely can get these loans done for you guys, and a lot of advantages of this product versus other types of financing in the market. Okay, I'm going to show you guys some just some quick photos, some before and after, full kitchen renos. Okay. And we've literally done everything with these products. You have your staircases, bathrooms. These are full renovations, outdoor, indoor. Okay, full home renovations here that you're seeing that we've done. Okay. Let me share with you a quick case study. So case study here is a scenario where borrower purchased a house for $170,000. Okay, renovation expense. This was a 203K. It's a primary home buyer. $17,240 in reno. That's the loan amount. Borrower's putting just minimal money down. Okay, took 49 days to close on this one. Okay, so normal loan these days takes about 45 days. You can close a renovation loan in 49 days. You're doing this right. Because again, there's more involved with these loans. So we really have this down to perfection, the way that we process these loans. Renovation took about 35 days, so it was minor repair. Garage, bathrooms, living room, kitchen. This property after improved value was $250,000. So you're going in. The buyer's going in with $53,000 of equity. Okay, on this property. So really great deal. Some pictures here of the before and after. Okay, bathrooms, kitchens. Okay. Here's another case study. This was a reno of just adding a pool, and this was a refinance. So the original loan amount that the borrower owed the bank was $369,407. The renovation came out to about $67,000 for the rental piece. They financed $444,000. Okay, new appraised value came in at $520,000. Their property, the equity retained was $75,000 in equity retained on this property. Okay, and there's the breakdown of your payment. Okay, and you have your pool spa addition added. And again, this is not allowed on, for example, a 203Ks, but the rental loans, the home style allows it. And people tend to automatically go to like a home equity line of credit or do a cash out refi. You could do a refi in your house, pay off your existing mortgage, drop your rate down significantly because rates are down to nothing today, and add a pool. Okay, and probably your payment might not go up that much. So it's a really nice thing to have. Okay. All right. So I want to share with you guys a very helpful app that I give a lot of my realtors and my clients. Okay, this is ways that you can contact me here. It has all my reviews. Again, I'm doing this a long time. You'll see a lot of nice reviews about us. There's a calculator built in. This calculator is very, very helpful for you guys. If you go into a property and you see a property that you like and you want to know what the mortgage payment's going to be, you simply just type in the numbers and it will give you the full breakdown, including even the mortgage insurance if you're putting minimal money down. There's also news on here. You can constantly stream the news as to what's going on in the market. And again, ways you can contact me anytime. This is a sample here. You put in the number on top, 400,000 purchase, 15% down, rate of 5 3/4. This is an older template. Rates right now are down to nothing. 30-year mortgage. You put in the taxes, the insurance, approximate credit score, and you have some options on top of different kinds of loans. And it gives you the full breakdown of the payment right to the right. Has the principal broken down, the interest, the mortgage insurance, and taxes. Okay, a lot of calculators you might see out there might be a little confusing because they don't include everything. But this is at your fingertips and includes the full breakdown of your payment right there, okay? And you have access to downloading this, okay? Very simple. You just text Palumbo 801, okay, to 36260, and it will send you a link, and it'll take you 30 seconds to download it to your phone, okay? Again, it's a really nice app to use and have available, all right? So that's pretty much it. I'm going to just run through some questions here, and please, if you guys have any, just add them to the chat here. Usually, it's nice to do this in person, but I guess this is the new norm. So, okay, so let's see here. I spoke to Chris one time about most refunds to investment. Can I do simultaneously? Yes, you could absolutely do these products simultaneously with other refis. Freedom allows to do up to 4. So there's, because I deal with many investors, generally when an investor comes to me, they'll say, John, can you refinance, all these properties for me? And but we could do 4 at one time. I've had exceptions to do some more on an exception basis. I think I did 7 for one borrower at one time, but we do make exceptions above that. So absolutely, Nicole, Chris can certainly help you with that and can do it simultaneously for you. Let's see here. You're not allowed to do conversion, single to multi, but are you allowed to add bathroom? Yes, absolutely. So Joseph, good question. This product is great for add-ons. You can certainly expand your home, add a full addition, add bathrooms, add bedrooms. You just can't do a conversion from like a single to a multi, okay? But you are allowed to do any kind of additions to your home that you'd like, okay? So definitely a great product to utilize for that, okay? Let me know if there's any other questions, guys. My time is just about up here. Let me see if I answered them all. Okay, good. Okay, answered that. All right. Credit requirements. So yeah. All right. If there's no more questions, guys, thank you. My contact information is on that app, but you can reach me, anytime. I'm always on my phone. I'm always on the email. If you have a scenario, and again, whether it's a primary residence, you have an end buyer, you have a property that you want to renovate, that you want to flip, you want to fix your house where you live, this can be used for anything, okay? And it's a really, really nice, just again, the advantages of this cheap kind of financing in comparison to what's out there. And please, when you go into a renovation loan, if you're a realtor on the line or just an investor, work with the right people. I always tell people, make sure that when you're it's like when you do a renovation, you want to have a good GC, you want to work with a good attorney when you're buying a house, you want to have a good title company, good home inspector. Same thing with a reno. You want to have a good lender that understands how these renovations loans work in and out, because I can tell you they will be a nightmare if you're working with the wrong people. All right. So thank you guys for your time. Thank you for your questions. And hopefully we'll get to see you guys in person soon. Stay safe, stay healthy, and please reach out to me on anything you need. My direct cell number, if you want to jot it down, is 973-699-3797. Again, 973-699-3797. All right, guys, thanks again. Enjoy your weekend, and I'll talk to you soon.